Welcome to the latest episode of The Financial Frontier. I'm your host, Patrick Camuso. I'm very excited to introduce our guest today, Carrie Sechel. She has a wealth of experience and she's the co-founder of SentiTrend, which is a very interesting company that helps you predict and strategize for your Web3 organization in a innovative way. So we're going to be discussing that in detail along with the role that she plays working with Web3 companies. So Carrie, I appreciate you coming on here today.
Thanks. It's so great to be here, Patrick.
Absolutely, absolutely. So to get started, can you tell us a little bit about yourself and your company and a little bit about, how you got involved with Web3 and just a little bit of background?
Sure. So I have an accounting and tax background by trade. So went to undergrad school, majored in accounting, went to law school, and focused on tax. And from there, I went to the Big Four. Back then. Gosh, it was just becoming. It was still the Big Five. I actually went to Arthur Andersen to begin with. And from there, Deloitte, I was a partner for 7 years. And then I went out on my own. I started a coaching business, which was not accounting and tax. It was really focused on coaching individuals. And though I ended up not really loving coaching as a business as much as I thought I would, it gave me a lot of experience as a business owner and also working with people in a different context than just consulting. And from there, went into a whole exercise of learning about the financial markets, which led me to where I am today as a co-founder of SentiTrend, which is a predictive behavioral forecasting consulting company. I also do fractional chief of staff work, which is really fun, and that gives me an opportunity to do some coaching and also to use all of my experience, which is in a wide range of business operations and strategy to help companies.
Absolutely. So I want to get into both of those because I think they're very interesting. Before we really get into the details with SentiTrend, can you briefly explain how you view the role of a fractional chief of staff and maybe a little bit on like who is the ideal type of client for that and like what are some of their biggest pain points?
Yeah, absolutely. So when I was, rewind quite a few years, when I was at Deloitte, I acted in a chief of staff role for a leader of one of the largest industry practices in the US firm. And I always really enjoyed that role because it gave me a chance to work with a leader as a strategic partner and an advisor, but it also gave me the opportunity to get my hands dirty and to get in there in the business and to really make change. And one of the things, when I started to think about what do I do and what am I good at, how can I really get into a business and make change, help a business be better than it was before I was hired. Um, I kept thinking about this mix of the coaching, consulting, executive advisory, strategic partner, and also my breadth of experience in operations, finance, etc. I have a lot of experience, and I like that. I don't mind, some people with lots of experience are like, oh, I don't want to get into the details. I don't want to see all of that stuff. I don't want to, like I call it, get my hands dirty. And I'm like, no, I really like that because to me, when I'm working with a business leader and their business is struggling and they don't have the resources or the staff or the right people in the seats to get the work done, it's extremely difficult to advise a leader on how to level up as an executive. But when I can, especially in startups are so perfect because, when I look at the life cycle, somebody has a great idea, or maybe it's a group of people have a great idea. And I see this all the time in the Web3 area. Great idea, super smart, like brilliant smart. Go out, get funding. So there's some money. It's all hands on deck. get a proof of concept together, build a community. You're seeing momentum, and all of a sudden you have a business and you're expected to be an executive. And you're at a very, very vulnerable point, because there's no guarantee that that business is going to continue on. There's no guarantee of success. And so a lot of businesses, particularly the founders, find themselves in this place where they need somebody with a lot of experience to come in to help them get out of the day-to-day, because they can't be all hands on deck anymore. They can't be one of those hands. You gotta be the leader and the executive. And so how do you get out of that and not be one of the hands, and have somebody get the right people in the seats and to get those things done, to allow you to level up and to also help you with that and help you understand what it means to be an executive. So that's what the fractional chief of staff role is. And frankly, in big companies, chief of staff is a full-time role, but in startups, this is a great fractional role, and it's something that in a really reasonable amount of time on a monthly basis, huge rocks can be moved.
Yeah, I agree. And like you said, for a startup, it can be on a fractional basis, and it's an imperative role to get someone in on that fractional basis if you're experiencing quick growth, like you're saying, because then you get thrusted into these scenarios where you do need advisory from someone that is going to bring that right perspective to the table. And I think that's exactly
Right.
what this role fulfills.
Yeah.
So getting into SentiTrend a little bit, could you get into that? Like, what is the overarching vision behind that, and how does this predictive behavioral analysis fit into developing a business strategy that's going to drive results?
Right, absolutely. So SentiTrend is based on a objective and verifiable model that predicts human behavior. And so I want to step back from that and just and help you understand the premise behind the model. And the premise is that emotions, so our emotions drive behavior. So they drive what we do. And that behavior drives results in a business. Now, a lot of times, a lot of the conventional notion is that, okay, we have to change people's behavior, or that behavior actually drives how people feel. And that is actually quite backwards. How we feel and the underlying mood. So there's a mood out there that is a social mood, and you hear it all the time. People talk about vibe, they talk about culture, they talk about all these different ways to explain this thing that we feel that is driving our behavior, and it's deep on a subconscious level. And the reality is that is very patterned, it is very predictable, and then the behavior that actually marries up with those different emotions is also very, very patterned and predictable. And sometimes people look at me and they look like, oh, that sounds nice, that sounds interesting, like that'd be fun to talk about over cocktail hour, but like, what would that really do for my business? I say, well, what wouldn't it do? People are the living, breathing mechanism that drives the business. Even if the business is highly automated, there are still people that are driving decisions, and those decisions can change. People often are like, why did they do that? Or why is that team not working as well together as they used to? Or why are people not following processes and procedures? Or why can't anybody make any decisions anymore? These are all very predictable outcomes. And when a business understands these and can prepare both for on a daily basis, but also prepare for how is this forecast looking, 3 months, 6 months, 9 months from now. Business has powerful information to structure strategically and operationally.
Yeah, and I would imagine, in an industry such as Web3 and crypto and digital assets that, is largely driven by sentiment just because of its size and the nature of it, this can be a very powerful tool for businesses in that industry for that reason. Have you seen any like specific industry or type of business or like industry size really start to focus on this or use it more than other types of businesses?
Yeah. So first of all, like you mentioned, this applies to just about any business. So in any sector or vertical, the difference with Web3 is so volatile. And remember what I said before, emotion drives behavior and behavior drives results. So the emotion, the high volatility, and volatility is just a measure of emotion. That high volatility, it makes this a huge opportunity in the Web3 world. And when we talk about size of business, one of the things that's really interesting, and my partners and I talk about this all the time, is a business, you know, sometimes needs to be at a certain level of maturity to recognize this type of of consulting as a benefit. And it's not because the business can't benefit from that at an earlier stage. It's just that business leaders have the mental space to say, okay, what else is out there to give us a competitive edge? What I would love to see in the Web3 space is businesses at an earlier stage saying, wait a second, I can position myself much more competitively than businesses at the earlier stage of which I'm at actually position themselves and are able to plan. And the power in that, the power to make decisions both internally and externally is is really pretty amazing. And so, when I look at Web3, and we ended up in Web3 sort of on accident. I had a friend that had a Web3 company, has a Web3 company, a successful company. And they were having, challenges just thinking about wrapping their heads around the currency risk. And so we started talking about that, and then have really worked through almost 2 years now, embedding this thought process of, okay, how is this driving behavior? What can we expect? What are the vulnerabilities that we have? And that's been really, really exciting. We kind of think, are we a little bit early to the Web3 market? And we may be, but it is an amazing use case for this type of analysis. And I know that there are businesses that are just going to benefit greatly from it.
Definitely, definitely. Like you said, it can give them a much wider strategic advantage. And I think it's going to deliver a lot of strategic insights at a high level for people in those CEO roles. But do you think that those
Yes.
insights they'll trickle down to like the CFO roles when you get into forecasting and budgeting and other sort of, tactical aspects of it like that as well, right?
Absolutely. Absolutely. And Patrick, you just brought up something that's really important. When consultants start talking about things like predicting human behavior that sound like super heady, it's like, okay, this sounds like some strategic process that does, then how does that really apply to business operations? And what I say is it could not apply more, because those strategic decisions are great, but this type of analysis and insight, this insight allows us to understand how people are going to interact with processes and procedures, risk management, decision making on an everyday micro decision basis. And from a CFO standpoint, imagine when you're doing scenario planning, somebody says, okay, well, like, we need you to do a forecast, CFO. We need you to do a forecast of the next 1 year, 3 years, 5 years. we got to plan for that. And when you're doing that forecast, there's a, the conventional way of just saying, okay, like let's extrapolate out a growth rate, an expense, a burn rate, so forth. But a lot of leaders are going to ask for a more sophisticated look at this and say, like, well, what if this happens? What if that happens? What if the market, because over the next 5 years, clearly there are going to be times when the market is not the same as it is today. And that's going to have direct impact on your business. Well, as a CFO, if you can say, well, I have a more powerful way to scenario plan, a powerful way to assign probabilities to different scenarios and how the market is most likely to interact with our offering, our token, our, community, that is extremely powerful. And you can start to say, okay, here are 3 scenarios. Here's the most probable. Here's a possible, here's a random scenario, and assigning that and being able to sit with, the C-suite or the board at a strategic level from a finance function perspective, that is financial strategy, and that is bringing value. I call it from, accountants, and I think it's super important, especially in the Web3 space, because, I see a lot of accountants and CFOs that run the gamut of sophistication. And if you're listening to this and you're maybe not as experienced of a CFO, or you feel like you're finding yourself just mired in the details of accounting, this is how you, what I call, move yourself up the value chain and find yourself in those seats with the CEO, with the boards, and you really start to gain a powerful visibility and bring real tangible value to your organization.
Absolutely. And the forecasting, it's imperative for all types of businesses, but particularly when we're talking about Web3 and crypto, these markets are extremely volatile. And if you're not planning correctly and managing your treasury correctly and your budgets correctly, the bear market could come and you could just be dried up with capital and not able to seize and consolidate the opportunities that are going to be present at those times. And it seems like SentiTrend can help really predict that, and assign, like you said, assign probabilities to it and help create more concrete cases for people to really plan with some data behind it, rather than just creating different scenarios and trying to really take an educated guess at the market.
Absolutely. And that Patrick, is a really important, that I'm happy you brought that up, which is that the coming up with scenarios. I think a lot of times we think and we hope and we wish, and you can look at Twitter all day long and price charts and this person's idea and that person's idea, but having an objective and verifiable way to assign scenarios and assign probabilities to those scenarios, that you can go back and it's based on data. It's based on objective data that isn't, based on emotion.
Yeah.
That is really powerful. And it starts to position you for when you're sitting in a space of uncertainty. And I think the crypto market, actually the whole market right now, is really, on this shaky ground. And we've seen, a prolonged period of elevated social mood. And what that means is the underlying undercurrent is this elevated, which we see people getting more exuberant. I see, we talk about words like more emboldened. And that drives behavior that is more of an appetite to risk. And now we're seeing like this, the rug sort of got pulled out really quickly. And I think it caught a lot of people off guard. And you see this change in mood, and you may be noticing people interacting differently. You may be noticing people making different decisions on an everyday basis. You may be noticing teams that have a different dynamic now and are more or less able to make decisions. that's all based on this underlying mood. And there's a lot of uncertainty. People, gosh, I thought we were in a bull market. I thought, price was going to do this. And there's tons of emotion wrapped up in that. As a business leader, if you have an objective and verifiable way to pull yourself out of that, to understand those emotions, because we all have them, you're not going to get away from the emotion. It's not like something that you could like take a pill and say, I don't want to feel this anymore. But what you can start to do is to start recognizing and understanding how that drives behavior, observing it, and making conscious choices about how you lead, and also conscious choices about how your staff is managed, how your communication to your community or your stakeholders, your customers is done. That all positions the business in a way that allows you to be in the offensive position at a time when everybody else is gripping and feeling like all they can do is play defense.
Exactly. It can give you this awareness on where everything is currently at in the current cycle, and also where it's going to be even 3 to 6 months from now. And like you said, that gives you the confidence to go and pursue opportunities. And right now, people, like you said, they're looking at all of these, different fragmented data sources, Twitter, looking at, different keyword trends online, looking at price charts, and SentiTrend seems like it can go and capture a much wider range of data sets that are going to factor into what the overall sentiment is, apply probability to it, and really give a structured way to make decisions. And you can, whether the decisions even go right or wrong, you're not guessing anymore. You're looking at probability assigned to these different scenarios. So it really helps you have a much more strategic decision making process overall. I think we spoke about this before. It's much similar to like if you're in a casino playing blackjack, being able to count cards. You still may not win every hand, but you're going to know that the decisions that you're making, whether they're healthy decisions or unhealthy decisions, based off of the probabilities.
Yeah, that is an excellent way to look at that. Yeah.
So have you had any challenges in terms of, building this out and predicting, applying some of the predictive analytics to the crypto market and the Web3 industry? Because, it is a nascent industry that's largely historically driven by, the retail market, and it's very sentiment driven, but it's obviously evolved over time here, especially these past couple of years. So how has that process looked for you?
Yeah. Yeah. So, like, as you mentioned before, nobody absolutely knows what the market will do. What we look at is patterns. And to step back for a minute, the work that we do, we look at charts as one data point. And the reason we look at those is because of the patterning. Now, there are all sorts of other indicators and data points that we draw from. But when I look at a price chart, I look at the price chart, and of course, if I'm invested in something, I'm going to be interested in price just as a human being. But when I'm looking at that for a client, or I'm looking at that to understand in this industry, the overall sentiment in the crypto industry, I'm looking at that as people. People are coming together and they're expressing a view, and that view is based on the underlying emotion. So if I can look at those patterns that are manifesting in how price is moving, it's really people who are patterning, and they're showing us a manifestation of their behavior and their underlying mood on a price chart. So
Chart's almost a lagging indicator in that regard, then too.
yeah, the price chart, one of the things that's really interesting about price charts is that there are all sorts of indicators all over. The great thing about a price chart is that price charts, and in crypto, it's really powerful because price charts, people are actually trading all the time, all over the world. So the price charts are on a day-to-day basis the indicator of right now. Now, one of the really powerful things about the analytics that we do is that because there are only a certain set of patterns, and those patterns manifest over and over and over and over, and they have for thousands of years, and there's tons of research around this. Those patterns and how they evolve in a certain set of ways. And so it starts to allow us to narrow down what is most likely to happen, what could happen, and then what are some random possibilities. In the crypto market, I'd say one of the biggest challenges is, you can look at a price chart and make and predict what is going to happen, say, over a 3-month period of time. And you could be spot on. The challenging in this industry is that the volatility on a daily basis can be jarring. So if we're sitting with a client and we're saying, okay, this is what we see happening, and then the next day price drops 10%, and we're calling for a trajectory to the upside, that's going to feel like, oh my gosh, this doesn't work, we don't know what we're doing, this is it can jolt you into that uncertainty.
Yeah.
But that doesn't necessarily mean that the 3-month forecast is wrong. It just means that there are these swings that occur in this market that are really, really jarring. And in this work, but I really think to be in a business in this industry in general, those are the types of price movements that you have to find a way to manage emotion around just in general, because if you don't, you're just going to go crazy.
Yeah. Each bull market, each bear market, people really go through that, especially if it's their first one. And if you're able to understand the causes behind that and where the market may be going in the future, it can actually even help manage the emotions. And like you said, people's emotions are going to drive a lot of their business decisions and their investment decisions. And I think it's interesting, like you were talking about the price charts, that is more of a lagging indicator, I would say, compared to a lot of the other factors that you're looking at, because you're looking at other aspects of which driving people's decisions and emotions, probably that lead up to them going and making a buy or sell decision and triggering that price. So you may be able to build more of a narrative and perspective on, where you're at in a given time. And then that can also, help give more of a perspective on where things are going in the future. Would you agree with that?
Yeah, from the perspective of, shifts in behavior, shifts in that underlying social mood that drive the behavior, they start to occur before it's readily apparent.
Yeah.
So those shifts in mood are these like subtle things that start to shift far before we're able to see it. And this is why the predictive forecasting is so powerful, and understanding how the patterns we're seeing right now, how they are most likely to play out, and what they're most likely to lead to. Because then you can start to really get ahead of the market, because you're not going to understand for a bit of period of time that shift that has occurred, because the herding and the people showing up and making the decisions, and price actually moving very strongly in a specific direction may not occur immediately. But if you're actually already starting to make shifts, because you're seeing these indicators, you're seeing the underlying data point pointing in that direction, and you're ready, and that starts to happen, and then people, you're able to take advantage of opportunities and to be in front when others are just saying, how could this happen? I think it's and what's really interesting too is the decision making it can kind of play with your mind, because when the market, say for example, the market's like going up and up and up and up and up, there's this underlying like, oh my gosh, FOMO, I'm missing out. I've got to do this. I've got to do that. There's this drive. The market's like compelling this impulsive behavior, and very, risk on, like let's go for it. Let's go for it. Let's go for it. And if you are aware of how that patterning is going to play out, most likely going to play out, and you're ready and you're saying, this is, this is not, and sometimes the market keeps going up and the pattern may be saying, yeah, it's going to continue to go up. And how do you take advantage of that? So being able to parse out those times when, when is it false? And when are you just being, when is it the right, a decision that can position you where you want to be, or a position that is just being compelled by emotion. Being able to really discern that is powerful. And the same is true, in a bear market, when, everybody hears, buy at the bottom, or, you're supposed to do all these strategic things at the bottom, but it's really, really hard to compel yourself. Yeah. And who knows when the bottom is, and when, and, no, I'm not going to sit here and tell you that anybody knows how to call a top or a bottom, because it, sometimes that happens. A lot of times it doesn't. Where are the indicators that start to indicate, and how do you start to shift behavior on a risk managed basis to take advantage of opportunity, or to make sure that you're not taking undue risk, but to position yourself so you're leading into the next trend, instead of waiting way too long and saying, oh my gosh, like I should have gone out and started this new service offering 9 months ago.
Exactly.
It's
And
only
it's so
apparent
important
to me now.
Yeah, and it's so important for Web3 businesses because the market moves so fast. You don't want to be in that same just, despair or euphoria that the whole entire herd and market is in right now. You want to be positioning yourself for the future. And it's really hard to do that as an individual. Even if you have years of experience in the market, to a degree, you're going to be dealing with the emotions and the business aspect of it. And having something like SentiTrend, where you can look at all the scenarios with assigned probabilities and use that as a decision-making framework, starts to make you much more accurate, whether the outcome is as predicted or not, because it is still probability based. But overall, if you're
Yes.
increasing your probability and your likelihood of being correct over time, it's going to lead to outsized returns for you, just similar to like, blackjack counting cards or anything like that. Basically, it's just increasing your probability of making the right decisions and not getting caught up on any one hand that you're dealt in the market, basically. So I think it's fantastic. I think it could benefit Web3 businesses a lot. So Carrie, you work a lot with CFOs and CPAs. I know you speak with a lot of them. You've been in the industry for a while, and now you find yourself in Web3. So, what advice would you give to CFOs, CPAs, or even other executives in Web3 that are interested in building their expertise in this space, that are maybe coming from more of a traditional background or a Web2 background, as people would say?
Yeah, I think that's a great question. And so I started working in this space a couple years ago. And for people who are coming into this space, there are a few things I think are really important. Number one, I think this is a great community of people. I have met the most giving, kind fellow CPAs and finance professionals in this ecosystem than I think anywhere in my career. People just are very welcoming, and they want to help you learn. So ask for help, join some groups, get to know people, build relationships. It's just a really nice group of people. So that's number one. A couple other things. Number two, be ready to be a little surprised by things that you may in traditional businesses have taken for granted that are just, I call them the old is now new again. So things like payables, receivables, payroll that are in a traditional business, something that a CFO probably doesn't think very much about, if at all. Other than making sure that the metrics aren't showing up in some really strange fashion. But there are other people who are focused on those areas. In Web3, some of those areas can present huge opportunities for the business and also have, depending on what the business is doing and how it's operating, it could present risk areas and areas for management that are just different. And as a CFO, taking those things also, wallets, CFOs are a lot of times, you may be focused on managing very, very large banking relationships and relationships with significant lenders, and everybody else is handling the other pieces to those puzzles, a lot of details that you can't and it wouldn't be appropriate for you to be really involved with. In Web3, with wallets, I can't stress enough the importance of being willing to get into the details and understand that, and really understand the architecture, understand who has access and your controls around that. It's just highly important to get into those details. But again, I think it's interesting. I think it's fun because it gives us new things to learn. And then I'd say the third thing is from what I see, I think that there's a really awesome opportunity for the finance function to move up the value chain. And Web3 has, in just the last couple of years, come into a place where compliance is even available. And what I mean by that is, before that, and Patrick, you have been on the cutting edge of this, so you probably know better than just about anybody how hard it has been to just even file a tax return, to put together financial statements that you can say, okay, we did everything we could to put these together, and this is the best reflection of the financial health of this business. So, and a lot of businesses weren't even focused on this. So in the last several years, the subledgers have gotten better. The CPAs have become, far more focused. The regulations have become clearer. So compliance, I still think that we are in what I call an age of compliance. And that means that there is a lot of focus and time spent on compliance. There's a lot of amended returns that have to get done, a lot of financial statements that have massive cleanup. But that age of compliance is not going to last forever. And I think this is a huge opportunity for finance professionals and CPAs to be in front of the value chain. Businesses are going to get bigger. There is likely going to be consolidation in different parts of the industry and sectors, which are going to lead to even larger businesses. The metrics are different in this ecosystem, and they vary widely based on the type of business model you're dealing with. So there's a lot of creativity. There's a lot of great thinking and curiosity that finance professionals who want to think out of the box, who want to be strategic, who want to be at the table with the board and the CEOs, huge amounts of opportunity for that. I think that, we're still in this, like I call it, the age of compliance for a little while longer. And then I see just a massive opportunity to move up that value chain. And so I think that the finance professionals who are leading that, and I know, Patrick, you've been leading that in the sales tax area and some other areas, like really thinking about the new issues, the issues people aren't thinking about yet, pushing on those metrics, pushing on KPIs, pushing on, looking really, really deeply into what is driving finance in a business at all sorts of different levels, like looking at all the different ways that this business is being driven, and coming up with different ideas of growth areas, risk areas, scalability opportunities. That is a huge opportunity that I cannot stress enough, that is going to come quickly. It may not be here quite yet, but it's going to come quickly, and I say be ready for it because it's a huge opportunity.
Absolutely, I agree with you. It's a huge opportunity. And there should be more CPAs and CFOs that are pursuing that. I think over the past couple of years, like you said, though, we've definitely seen more professionals coming into the space to fulfill that role. So I'm definitely looking forward to those opportunities. So Carrie, this has been, extremely informational and insightful. I think SentiTrend is great, and it's, a very unique approach to decision making. I'm sure everyone listening here has gotten a lot of value out of this. So if they want to connect with you personally and or connect with you and your company at SentiTrend, what's the best way for them to contact you?
Yeah, I would say LinkedIn is great. So SentiTrend has a page on LinkedIn. We post all the time. So if you want to see some different materials about what we're about, we have a lot of thought leadership out there. You're welcome to message me directly on LinkedIn. I'm totally open to DMs and connection requests and would love to connect with you. You're also welcome to email me. And my email is very, very easy. It's just carrie@carriesechel.com. So any of those avenues are welcome, and I would love to connect with you further.
Definitely. And I encourage everyone to reach out to Carrie. She's a pleasure to speak with. She has a ton of great knowledge. So, be sure to connect with her, learn more about SentiTrend, learn more about the services that she offers as a fractional chief of staff. To everyone that's watching, I hope you gained some insights from this conversation today and some value from it that you can go and implement into your business and your investment portfolio or your practice. Carrie, thanks again for being a guest on the Financial Frontier. Until next time, I'm Patrick Camuso, signing off.